The insurance game is rigged, and you're the prize. Want to know how insurance companies prove that you've had a bad year or that you've had underwriting loss and your group medical plan is just going to have to go up? Spoiler, you're not the unprofitable bad case. In fact, you're the prize. But they'll never tell you this because, well, it's a good thing you have me. You'd ever sit in one of those renewal meetings where you've got all the people, all the king's men and all the king's horses, including your insurance broker, and you know the ones, they wheel in the sacred artifact, the spreadsheet. My gosh, the one with so many rows and columns it looks like it was blessed by an ancient Excel priest. That's the one, right? That's the holy grail of comparing apples to apples. And then they tell you with a straight face, good news, we fought really hard for you this year. They came out with a 22% rate increase, but we negotiated it down to a 17% increase. That's good, right? Because you're thinking in the back of your mind, trying to look grateful and say, oh, wow, thanks. That's not too bad, right? Wrong. That's not good news. That's not a win. See, this is the part where the insurance company starts wheeling out the reports to prove that you're the loss leader, that their book of business is so profitable, but you just didn't quite make the cut. They gather up everything that they experienced with you this past year. Surgeries, prescriptions, the guy who tore his ACL playing pickleball at lunch, and they show you how much it all added up to. Then they say, well, we basically didn't make any money off you last year, but we're feeling generous. So we're going to renew you with just a little tiny rate hike. And we gave you consideration and knocked 5 points off your renewal. And you nod along because, hey, what are the other options, right? Well, hey, one of the options should be self-funded. Then someone says, oh, no, that's risky. Self-funding is risky. What if someone needs a liver transplant? And suddenly you're scared of health care in a ghost, the healthcare ghost, we'll call it. Because the truth is, instead of realizing that you're already in a real-life horror movie and the killer is billing you monthly, they've painted this destination of what if, and the hypothetical world of fear starts seeping in. It's just kind of like the mist out here. It just kind of floats in, and the mist comes over self-funding. You're like, oh no, I don't want that. But here's the truth. Fully insured insurance companies love when you're afraid. They love the fear is profitable. Think about it. If you're not challenged, you're not growing. So that confusion, even better, because it keeps you locked into the system while they keep playing a game of financial hide and seek with your money. It's house rules, right? They make the rules and they're the house. They're playing with your money. Let me ask you something. When your employees stayed healthy, skipped a doctor visit, kept their claims low last year, who got rewarded? Was it you? Did you see that reward? No. Did you get a check? Did you get even a nudge to your bottom line? It was a fixed cost, wasn't it? Wow. Or did the insurance company quietly pocket the savings and say, thank you for playing? Wow. Because here's the dirty little secret. The premiums you pay, they're stuffed to the brim with hidden charges, like no one ever explains. And frankly, no one ever wants you to understand. I'm not talking about the normal stuff like deductibles and out-of-pockets or 80-20 stuff. No. I'm talking about the soft, squishy numbers that no one ever questions, right? Stuff like pooling charges, which are basically stop-loss premiums in a self-funded case, which they buy from themselves. Or industry load factors because they think you're a dirty business or a high-risk load business, okay? Actuaries just guessing what your industry is and how risky it is because various reasons, okay? Here's the big one, the trend factors. What is trend? Medical trend is a made-up number. It's also math we made up to justify charging you more. Boom. Then there's demographic loads. You've got a mix of ages, so we're just going to upcharge you for that. Pharmacy trend factors, because Big Pharma changes prices more often than you change your socks. And let's not forget capitation factors. These are fixed costs that they put in for bundled services like mental health, organ transplants, whether you use them or not, but those have a tendency to go up anyway, like clockwork. And just when you think the madness is over, we enter the dark realm of reserves. IBNR, incurred but not reported, or as we like to call it, incurred but not really. Pending claim reserves, just in case something might happen, right? Rate stabilization reserves back in the days of mutual companies, because the insurance company likes to keep your money just in case as a as a hedge against future claims. And when they retain that money, do they pay interest? Somebody gets paid interest on those reserves. They don't ever tell you about that. They keep that too. And the kicker, none of this is transparent. You get no breakdown, no receipts. It's like eating at a restaurant, gives you a $6,000 check and says, trust us. It was delicious. Oh my God. Look, here's the reality. As long as you're in a fully insured plan, you're the house's bankroll. You are the only one with the chips. They're just handling your money for you and essentially doing like the restaurant we just mentioned does. Trust us. It's delicious. Come on, man. You're covering other companies and their bad years. You're subsidizing poor claims and poor behaviors in that same pool of business. And you're stuck in a system where your best case scenario, a smaller annual loss, a less bad renewal. You're not winning. You're just losing slower. Gosh. At Better Source Benefits, we don't play that game. We open the books, we show you the costs, and we actually help benefit your company from good health and best practices. We don't punish you for it. Self-funding isn't scary when you got someone who actually knows what they're doing. What's scary is trusting a spreadsheet made by the same people who profit whether you win or lose. It's like playing poker with a dealer who owns a casino. And spoiler alert, you're not leaving with the chips, baby. So yeah, maybe it's time to stop pretending that the spreadsheet is a sacred truth in the insurance business and start treating it for what it really is, which is a very polite invoice for a rigged game.